What if the money in your wallet or on your phone wasn't just digital, but digital and issued directly by your government? Imagine opening an app created by your country's central bank and seeing a balance of digital pounds or digital euros that you can spend instantly, anywhere, with no bank account, no fees, and no delay. Now, that's not a futuristic idea anymore. It's called a central bank digital currency, or CBDC for short, and over 100 countries are already exploring it. In today's video, we're breaking down what CBDCs are, why they matter, how they could change banking and payments, and what they might mean for you. So let's start with the basics. What is a central bank digital currency? Well, think of a CBDC as digital cash, so money you can hold and spend electronically, but just like physical notes and coins, it's issued and guaranteed by your central bank. That's the same institution responsible for printing money today. So here's a comparison to make this clearer. When you use cash, you're spending public money created by the central bank. No one needs to verify your identity. It's anonymous and direct. Now, when you use your bank card or an app like PayPal or Revolut, you're spending private money. That's money held in your commercial bank account managed by a company. Now, a CBDC bridges the two. It gives you the convenience of digital payments with the safety and backing of central bank issued money. Now, to picture it, imagine a government-run version of Apple Pay or Google Pay, except instead of your money being stored with a commercial bank, it's stored in a digital wallet issued or licensed by the central bank. You could tap to pay at any shop, send money instantly to friends, or receive payments from the government, all without a middleman. So why are governments and central banks even considering this? Well, here are some key reasons. Number one, cash is vanishing. In Sweden, for instance, fewer than 10% of all transactions are now made in cash. Most people use mobile payment apps like Swish, but that raises a problem. If cash disappears, how do people access public money? A CBDC ensures that everyone still has access to government-backed money, even in a digital-only world. Number two, big tech is stepping in. Companies like Meta, formerly known as Facebook, have proposed their own digital currencies. Do you remember Libra? Apple, Google, and even Amazon are offering payment services. The fear is that private firms could start controlling access to money and payments, especially in countries with weak financial systems. A CBDC provides a public alternative, like a digital rail that everyone can build on. Number three, international pressure is rising. China's Digital Yuan is already live in several cities and has been used in the Beijing Olympics. The EU, the UK, and the US don't want to fall behind in global finance and trade. In a world where cross-border payments are still expensive and slow, CBDCs could become the new norm for international transactions. Imagine a future where a company in London pays a supplier in Singapore instantly, with no SWIFT codes or currency exchange delays. That's part of the appeal. Now, how could CBDCs change the financial system? Well, let's zoom out and look at the wider impact, starting with how CBDCs could change how banks, payments, and monetary policy work. Firstly, commercial banks may lose deposits. Right now, you probably keep most of your money in a bank account. Now, that bank uses your deposits to make loans. If people start moving their money into CBDC wallets because they're safer or easier to use, banks could lose funding. Now, to prevent that, central banks are exploring limits, like capping CBDC balances to £10,000 per person, to avoid destabilising the banking system. Secondly, monetary policy could get faster and smarter. So here's an example. During the pandemic, governments gave out emergency stimulus. But delivering those payments was slow and patchy. Checks were mailed, bank accounts were mislabeled, and some people were left out. With CBDCs, governments could send payments instantly, directly into people's wallets. And because it's programmable, they could fine-tune policies like paying interest on your CBDC balance, setting expiry dates on stimulus money to encourage spending. Of course, these features raise big questions about control, which we'll come back to shortly. Number 3, payments could get faster and cheaper. Sending money internationally today can take days and cost a fortune. With CBDCs, cross-border payments could be nearly instant and settled 24/7. For example, a student sending money from the UK to family in Nigeria could avoid fees, delays, and third-party apps. So how could this change your everyday life? Let's break it down. Firstly, everyday spending. With a CBDC, you might not need a bank account to get paid, pay bills, or buy groceries. Imagine a wallet on your phone where your salary arrives every month and you can spend it instantly online or in stores. No bank fees, no credit checks. Number 2, greater financial inclusion. For people without access to banks, say the unbanked or underbanked in rural areas or low-income communities, a CBDC could open the door to secure, state-backed digital money. Number 3, privacy and surveillance. This is where it gets tricky. Cash is anonymous. CBDCs are digital and therefore traceable. Governments say they'll protect privacy, but it depends on the design. Will small transactions be anonymous like cash? Will authorities need a warrant to access your payment history? Could spending be monitored or even blocked? For example, could a government block spending on certain goods? Could they issue benefits that must be spent in certain ways, like only on groceries or rent? Technically, yes. Whether they should is another matter. Number 4, cybersecurity. A digital pound or euro must be safe from hackers. Central banks are investing in secure, resilient infrastructure, but no system is 100% immune. If a CBDC wallet is hacked, who's responsible? How is fraud handled? These are the kinds of issues regulators, technologists, and policy experts are working on right now. So here's the big picture. CBDCs could reshape how we hold money, make payments, and interact with the financial system. They promise speed, inclusivity, and innovation, but also raise tough questions about privacy, control, and the role of governments in our financial lives. Is this the next evolution of money, or a step towards surveillance and overreach? Would you use a digital pound or euro if it launched tomorrow? What would make you trust it or walk away? Let us know in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit that bell icon for more videos just like this one. If you're keen to learn more about finance, be sure to check out the industryportal.com link in the description below. Thanks so much for stopping by, and as always, keep growing, keep learning, and I'll see you in the next video.